Hey guys, welcome back to the channel. It is September the 15th. It is the afternoon session. The market is getting ready to close here shortly. But let's talk about location. Location and locating the supply and demand zones on our charts. What are some things that we should look for? Okay, so let's take a look. We'll start with the higher time frame, the 60 range chart. All right, and we'll blow that up here. Okay, again, we're looking here at the Emini S&P 500, a chart here. And what we can see here, I talked about this morning in a video that I posted, but I was kind of just breaking down actually the strategy I actually use. But the way to locate supply and demand is simply by looking for lows and highs on your chart. Okay, now we're looking at a higher time frame here, and we can see what the market has just been pushing to the downside right here. Okay, all right, latter part or middle part of August into the beginning part of September. All right, making lower lows and lower highs, and you have to visualize that to be able to see and understand the changes in the market direction, following market structure. Okay, so the market is moving to the downside here. Okay, it finally comes to an area right here, makes a low, all right, and then it turns. Okay, all right, we get a directional move back, moving to the upside, where price starts to make higher highs and higher lows. But just because price is making higher highs and higher lows doesn't mean that there immediately be supply and demand zones. Okay, in this case here, if price is making moves to the upside, then what we're typically looking for are demand zones. Okay, when price is moving to the downside, making lower lows and lower highs, following structure, moving to the downside, then we typically start looking for or start noticing areas of supply. Now in this case here, price makes a low, it makes a high, it makes a higher low, and then it starts moving up to the upside, just making swift higher highs and higher lows. Now this is a 60 range chart, so you have to be mindful that things don't happen in a fast pace, okay? But what does it do? The first thing you have to identify is if on the move to the upside, did it take out structure? Did it break a key swing area, all right? And it did right here. It broke through this area of resistance sitting right here, okay? This was a low, a lower high, and then a low, forming a swing. Then price turns direction and starts making higher highs and higher lows, taking out this key area of resistance right here. And at that point, the moment it does that, this is where things change, okay? This is where we can start spotting those key areas of demand on our chart, okay? So price pushes up, pulls back, breaks higher. The moment price does that and keeps moving to the upside, once we break this area of structure right here, this area of resistance, we have automatically started forming areas of demand on each swing to the upside pretty much, okay? All right, and I talked about, looking for or classifying high probability areas of demand. And how you do that is basically look at the swing as price is moving to the upside, and after it has broken this area of structure, which swings, meaning making higher highs and higher lows, which one had big gaps, to where it pushed up, pulled back a little deep. We got a nice move to the upside with loads of green candles, meaning lots of aggressive buying. Pulls back after making a high here, makes a higher low, okay? Loads of green candles pushing to the upside, all right? Same thing here. Now this is where everything originated at. We have a low, a higher, a high here, a higher low, and then lots of aggressive buying to the upside. So this area, and this area would all be classified as key areas where aggressive buying came out of, and which means that there will be demand in those areas, okay? And price at some point will come back to those areas. And will we look to capitalize on the rejection out of those areas? So, this here, this here, this here is a little supporting swing from this swing here, but all these can be classified as areas of demand. So, simply put, if you look for areas of demand, or how to classify, spot them, and how to locate those areas, say for instance areas of demand off the chart, Simply, once price has made a low and cannot push any further, it halts, it stops, and it changes direction from where it was once making lower lows and lower highs, is now imprinted a final low, which could be short term or long term, and then starts making moves back to the upside. High, higher low, high, higher low. But we're looking here to the left side of our chart as well to see, okay, what is the most recent swing high, okay? Major swing high. This right here, this area right here. So the moment price pushes through that area to the upside right here and breaks through there, then everything below it, as long as we have major swings, big swings, okay, then that's going to be areas of aggressive buying, and you can classify and start marking demand zones, not supply, demand zones, okay? And all you simply do is wait for price to come back to those demand zones, okay? Those demand zones where aggressive buying took place at, the ones you've marked, okay, and zoned off on your chart. Then once price taps into those areas, you go down to your lower time frame chart, all right? What do we want to see then? I talked about that in this morning's video. If you have not watched this morning's video, go back and watch that today, because it goes through the strategy. It goes through giving you basically little tips and hints. It walks you through the step-by-step process of how to find demand, the first area of demand, and then, you know, step 1, step 2, step 3, and then how to actually get into a trade. Okay, what are you actually looking for before you actually get into a trade? What is the step-by-step process? If you have not watched today's video, once again, go back and watch that video, because I walked through the process in a simple little tutorial talking about how to locate those areas of supply and demand. Okay, so let's see here. Now that's covering, you know, that area there. Let's see if you can find an area, say for instance, of supply. Okay, here, what do we see in July, August? What is price doing? Making higher highs and higher lows. Okay, all right, making these big swings to the upside. And what do you think these big swings are doing? They are creating, eventually as price is moving up, areas of demand. But, okay, but price tops out right here at some point. It must have hit some major area of resistance or supply, whatever it is, to the left-hand side of the chart. But it hit it, okay? Now, we're going to classify and find us a good location for supply, okay? Now, supply on the opposite side, or if you think in, you know, versus demand, is the opposite, okay? All right? We're looking for price now to start making lower lows and lower highs to the downside. It's made this final high here. It's pushed down, made a low right here. Pulled back, made a lower low right here. Okay? Low right here. Lower high, breaks down, makes a lower low. Okay? So the moment it starts taking out structure, meaning taking out swings to the downside, and the swings that it's formed, taking out these swings to the downside, are going to mark areas of key areas of supply, okay? So price pushed down, pulled back, broke lower, took this swing out here. Once it takes out this swing here, what do you think we have resting right back up in here? Supply. Why? Because there's aggressive selling that came out of this area. Aggressive selling that took place to take out this first area of support right here, okay? All right? Then it continues pushing lower. Low, lower high. Low, lower high. Low, okay? Taking out this next area of support right here, okay? So, naturally speaking, if price pulls back to this area, let's see, okay, so this is a swing to the downside right here, okay? So price could actually pull back to, let's see here, let's classify this, give me 1 second, right here, okay? Or it could come up to this area here as well, all right? Why do we have two areas? Because this is a supporting swing out of this bigger swing right here. So it's called a swing within a swing pretty much, okay? So now, okay, so we got three areas there. But if you notice, when price pushed down the first time and took out that first area of support, we've already broke an area of support. And once price breaks that area of support, the swing to the downside and say, oh, okay, we got some aggressive selling coming out of here too. A red candle, these big red candles to the downside, taking out a major area, taking out an area of support right here. Mark your area of supply above. The area of supply I'm gonna mark, okay, is right here. All right, now what I see here is that we have a green candle on the pullback, and then it makes this red candle right here. This red candle has a wick right above this green candle. So I'm going to mark the top end of that red candle wick to the bottom end of that. Let's show you. Okay, let's do this. All right, the bottom end of the green candle wick in a sense. Okay, so we'll do that. All right, and what does price do? Goes right back to that area to the tick. Okay, right back to that area to the tick. Tap it into the area of supply. Okay, so price tap into the area of supply. This red candle right here. The moment it breaks below the body of this green candle, I'm short. Okay, and try to take it back down to the low right here. Now, granted, like I said, this is a 60 range chart. So at this point here, if I was trading a 12 range chart and I saw it move like this, more than likely I would take it. Okay, all right. Off the 60 range chart, I don't take my trade off the 60 range chart. Now, like I said, sometimes I will take my trade straight off a 12 range chart, my anchor chart or my entry chart, well, one of my entry charts, okay, that I take my trades from. If I see an immediate push to the downside, okay, meaning price broke through an area of support here, forming a swing with this aggressive selling coming out of, and price immediately pulls right back to that area, okay? That's an immediate pullback, and I can take a trade from that area. I'll feel comfortable. You know, as long as price is kind of like, hasn't taken a period of time, meaning just continue pushing to the downside, you know, making lower lows and lower highs and breaking through areas of structure, and then it takes time for it to come all the way back up here, then, you know, that'd be a different story, because then once price gets back up there, I would probably want to be waiting for, you know, scaling down to see if price is really going to, looking at some other things, what I'm trying to say, some further rejection, give me more confirmation. But being that price came right back to it immediately after breaking this area here, come right back to it, the moment that red candle closes below that green candle, the body of that green candle, I'm short, taking it back down to the lows right here, okay, at least. So that would have been a good entry. So we've already identified by location, area supply, area demand, okay? And we've also marked some additional areas of supply right here, okay? So let's see. Okay, so price continues pushing lower, 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 all right? Then it comes down. What does it do right here? All right, what is it doing? It's bumping into an area of demand sitting right here, okay? All right, and what does it do? It starts pushing what? It starts pushing up, okay? All right, so then price makes a low here, pulls back, makes a lower low. Then what does it do? It starts pushing to the upside, okay? What does it do? On the move to the upside, again, it's, you know, starts to take out structure over here, all right? But it starts making these higher highs and higher lows to the upside, all right? Again, it's a 60 range chart, okay? But we're just trying to, you know, it doesn't matter what, I'm just trying to show you some examples of using, looking at market structure, fall and price action to identify those areas we talked about, supply and demand, okay? So, price makes a high here, then what does it do? It breaks lower, taking out this area right here. Now, it's already taken out this area here, so we can actually, you know, when it pulled back, or on the move to the downside, it took out this structure here on back to the run to the upside, okay? Now, yes, this could possibly be an area of demand and price pulls back there, pulls back to it, or it can just push right through it. So, but now that prices continue pushing higher here and then turns direction right here, taking out this area right here, what could this be here? Supply, right back up in this area right here, all right? So, price makes higher highs and higher lows to the upside, pulls back, break structure right here, okay? Turns back around, meaning that it pulls back on a pullback, taps into supply. The moment that price breaks this bottom of this candle right here, pretty much to close this red candle, goes short, okay? Now we done, you know, identified a couple areas of supply, a couple areas of demand, you know, and following price action, looking at the structure of the market, because the market is only going to move two ways, go two ways, either up or down. And if it's moving up, then it's breaking through structure to the left-hand side. If it's moving down, it should be breaking structure, to the left-hand side in a sense. So it's moving up, breaking structure, meaning breaking through. It has to break through an areas of resistance. Moving down, it needs to break through areas of support. And as price is moving down, breaking through areas of support, then on the pullbacks, the key areas where a lot of selling came out of, then you're going to find areas of supply, okay? If price is pushing up and taking out areas of resistance, then basically on the pullbacks to key swing areas, to, areas where there's larger swings at, where a lot of buying came out of, you're going to find areas of demand. That's simply put how and what, well, basically how you find the areas of supply and demand, how you locate them, okay? So that's all I have for you guys in this little short video here. Hope you found some value in, this video here, how I go about marking my supply and demand zones. Hopefully it makes sense to, a lot of you guys that are watching it. If you're a first-time viewer and it's your first time watching the channel, please take the time to hit the like button as well as subscribe to the channel by clicking on that little red subscribe button, and make sure to click on the bell icon, because without doing that, then you will not be notified of more videos to come. Right now I have over 300 videos on the channel, but yeah, go ahead and subscribe to the channel, click on the little bell icon, and that's going to pretty much wrap up in this video. I appreciate you guys watching. See you in the next one.